Okay, peeps, welcome back. So today we're going to be talking about our futures day trades and how we made just slightly over $900 day trading this morning, trading multiple different contracts. So with that being said, let's get it. So the first thing I want to go over is the reason why we trade multiple contracts is because of our strategy. Our strategy is relatively straightforward, although obviously it's not simple because nothing in trading is simple. We trade the 15-minute strategy, the 15-minute time frame with the intention of potentially getting a bounce or breakout off, or well, basically off the EMAs in either direction, and or shorting potential tops or buying potential bottoms, as you guys can see based on support and resistance here. Obviously, it's not that simple. Trading is very risky. We've been doing this for quite some time, and we still are not like the most legendary trader of all time. We take losses, stuff like that. Okay, it does happen. Believe it or not, traders do lose money, even if they make money in the long term. If you day trade, you are eventually at some point going to take a loss. That's just the way it works. It's just simple numbers. I mean, there's really no way to get around it. So, with that being said, let's go over the contract specs before we get into the actual trades. So here's the contract specs for those of you guys that want to know. So the four contracts that we traded today is micro crude oil, which is ticker symbol MCL. Trying to see if I can find the ticker here. Well, I mean, as you guys, it'll show up on the platform. You'll see in a minute. But as you guys can see, it says MCL there. So that is the ticker. We also traded future. The ticker is SI for future silvers. Or silver's future, I mean. So the NASDAQ is MNQ. We traded that one as well. And then the Russell 2000, which is the E-mini version. E-mini is 10 times bigger than the micros, just so you know. Most people trade the E-minis. We like to do a combination of the two. And that is RTY for the Russell 2000. So the way the pricing structure works on these is for micro crude oil. For basically every penny move, it's $1 in either profit or loss on a per contract basis. We only traded one contract of micro crude oil this morning, so that would be $1 move in either direction for every penny move of crude oil. Silver futures is a little bit different. This is the E-mini silver futures, or the full-size futures, as I like to call them. This is not a micro. This is a full-size contract. So basically, every half of a penny move is $25 in profit or loss per contract. We only traded one contract. We don't really trade more than one on the full-size ones because it can get pretty nasty if a trade goes against you and you get stopped out. If we get stopped out, obviously we could lose hundreds, if not thousands of dollars. That is very risky. We prefer not to do that, so we just traded one contract. So basically, every half a penny, $25 in profit or loss. We don't measure this by half pennies because that gets confusing. We just say every penny move it makes, it's $50 in profit or loss. That's how we measure it. Next one is the micro NASDAQ. So you can see micro E-mini NASDAQ 100 index here. So the micro NASDAQ is basically $2 for every point move. They measure it down here in the outright as 50 cents for every quarter move, but the NASDAQ is so extremely volatile, and I mean, it's extreme. It's like almost as volatile as crypto, I would say. So it is 50 cents for every quarter move per contract, but we don't like to measure it like that. That's complicated. So we'll just say basically every 1 point or every dollar move that it moves, or 1.00 is easier to remember. It is $2 in profit or loss per contract. And we only traded one contract of the micro NASDAQ this morning. Last one is the Russell 2000. This is the E-mini, as you guys can see here, E-mini. The E-minis are 10 times bigger than the micros, or the other way to think about it is the micros are 1/10 the size of the E-minis. So this one is $50 per contract, but that is based on a $1 move or a 1.00 move in the underlying, which is the Russell 2000. The way that they measure it on a per tick basis is basically every 10-cent move is equal to $5 in profit or loss. We do actually measure it in 0.1 moves on the Russell 2000 because that's relatively easy. It's very similar to gold. Gold is the same. Every 0.1 move in gold is equal to $10. So we're pretty familiar with that. So with that being said, let's go ahead and get into the trades. So we have the micro crude oil here. As you guys can see, we had this massive move at the start. EMA's crossed over and then it popped up. We couldn't really get past this resistance, and it had been sitting here for a while before we decided to take this trade. I think initially we had long down here and we got stopped out, and we said, or basically it went back up, stopped us out, and we said, okay, you know what? This thing obviously is not going to go up. Let's just go ahead and try to sell it. So we sold it. Excuse me. Shorted it more specifically. And then we got stopped out immediately because it squeezed back up. And I guess I wasn't really paying attention here because I thought that there was a candle close below the blue EMA, which is generally what we look for as a kind of like, okay, maybe now's the time to be taking a look at a short, or the inverse is also true. And didn't notice that it didn't stop below, so that was kind of obviously my fault. Took a $30 loss there, basically a 30 tick move. So again, $1 per tick move or $1 per penny move, and yeah, we got stopped out for 30 ticks. Our risk reward in the actual live trading is a 3-to-1, so we aim for 100 ticks in profit, or basically a full dollar move on oil for 30 ticks of risk. So a 3-to-1 risk reward. Now, if we get into the actual chart here, we're actually going to go over to the MCL. So this is kind of what it looked like on the chart. We try to get short like right around this area. Now, keep in mind, we have two different accounts, okay? So it's not going to populate here because this was on our other account. We have two day trading accounts. Unfortunately, this one is not going to populate because it's on the smaller account, but which we're trying to grow to become bigger. It's obviously easier said than done when you have less money to work with. But, well, for this particular account, I would say, but we got in pretty much right here around the bottom of this red candle, and our stop was 30 ticks up. So as you guys can see, it pretty much went back up there and stopped us out. And after that, we said, okay, you know what? It just looks like oil's just chopping sideways, so we're not going to do anything with it. Turns out that if we had bought long here, as you guys can see, basically right before the close, we would have been up roughly about 50 ticks. That is a long time to be sitting on a trade for 50 ticks. So we just decided, screw it, we're not going to touch it. So now let's enter into the next trade. So silver was the next one that we took. And we're actually going to show you guys this on the trading platform here. So you guys can see that unfortunately we were not awake for this. We would have liked to have sold this position right here at 6. You can see there was a massive move here. It basically dumped roughly about 35 cents. If my math is correct, I think that's about 1,750 per contract, but we didn't get that move. So we said, okay, fine. We got stopped out of oil. If we actually go back here, we'll go back to the oil. So you guys can see that this move was roughly about 9 o'clock. We got stopped out there. And then, or no, sorry, my bad. We took silver first, then we took oil. We took the loss on oil. This was on two different accounts. So our bigger account, we shorted silver. As you guys can see here, we got short right around this EMA. It went much, much higher than expected. We did not get stopped out, thank God. And it sold off for roughly about a 15-cent move. So that's about $750 in profit. Again, for every penny move, it's going to be $50 in profit or loss. So 50 times 15 comes out to $750. And basically kind of our risk reward here was like, okay, we're going to aim for 20-cent profit and risk a 10-cent loss. So basically aim for $1,000 and risk 500 to make the 1,000. And as you guys can see, it only moved up 5 cents. Thank God. We were thinking this EMA was going to hold here, and it did. And so that's how we made the 750 on silver. Now, if we go back to the silver chart here, you guys can basically see, if we go back here, you can see that this red EMA, which did end up holding initially in the trade up here, and you guys can see the wicks going back here. So this is a little while ago. This was like 3 weeks ago. You can see these wicks here. on the chart, roughly around the same area almost that we got short. So that we were also taking a look at that. And generally, when we're looking for major resistance and support zones, we move out here to the hourly time frame. And that's kind of what we look at to say, okay, where's a good selling point? Where's a good buying point? As you guys can see, this particular zone here. So you have resistance and then resistance again. Spelled out some pretty clear short zone to us, and that's kind of why we got short in that particular area. But we didn't want to get short below the EMAs, so we waited for the price to move up. It did eventually move up. It took a while, roughly about an hour or so, but then we got the trade. So now we're going to go ahead and move on to the next one, which is the NASDAQ. And just so you all know, this platform does auto-populate these. Once you select them and trade them, they do auto-populate. So that's why you're seeing this. Excuse me. So we then, after the oil trade that we got stopped out on, we got into the NASDAQ. So you guys can see it had this huge push up initially, and then it bounced, or I'm sorry, it dropped, and then it bounced, and then it went back up. And we kind of sold short roughly in this area up here at the top of these candles because we said, okay, this thing clearly cannot get past this zone. So let's just go ahead and short it, put our stop above this wick up here. Keep in mind, again, the NASDAQ is very similar to oil, a 3-to-1 risk. So we aim for 100 points and risk 30 as a stop loss. So clearly the stop loss was well within that 30-point range and still above this swing high here. And we said, okay, this thing's not going to hold. It's probably going to dump. And that's exactly what happened. Normally, we would wait for it to sell below the EMAs and then get in short after that. But we kind of thought that this was a pretty good probability of a sell-off. It turns out that it worked in our favor. Again, this is on the smaller account. And then we got a 60-point sell-off into roughly about this area right here, about the 40s. And so that's basically $2 per point move times 60 is $120. So we made $120 on that one. Take the 30 off from the oil loss. That was roughly about $90 in profit. So we'll go now over to the NASDAQ. You guys can see the NASDAQ here very clearly. So yeah, once it dropped below this yellow and blue EMA, it pretty much started tanking after that. And then we got the death cross here on the EMAs. Then you got the triple death cross. But by that time, a lot of the move had already played out, which is when we generally don't wait for that. So another thing, if we go over here to the hourly time frame, you guys can see that basically this thing had been riding the EMAs all the way up, and it was getting pretty overextended from these EMAs down here. So that's roughly about 100 points from this 18,110 level down to pretty much where this thing crossed. So about 18,020. That's about 90 points. Our full profit potential that we try to aim for is 100 points. So you can see how massive that overextension is from the EMAs. So that's part of the reason why we took the trade. Another reason is because generally speaking, when you get a move like this, as you guys can see, you get this move up, it bounces up, you get this wick rejection, and then this small breakout. And you can kind of see, like, I think I have to move over to the 30-minute chart to show you guys a little bit better, but you guys can kind of see here on the 30-minute chart that it was really struggling to break out from or even get close to this wick high here. So it really wasn't breaking the zone on the 30 minutes. So we said, okay, you know what? We're going to take a crack at it. Worst case scenario, we get stopped out for a 30-point loss, and then we got to wait to buy at the EMAs, which we may or may not get. And it turns out it worked out in our favor. So again, it's a game of probabilities. You got to understand how these things work. So now the last one that we're going to go to is the Russell 2000, and this one just really grated my skin hardcore this morning. I actually kind of got fed up with it, so I said to hell with it after the fourth trade or fifth trade, whatever it was. I said, you know what, screw this crap. I'm done. I don't even care anymore. Like, you know, we're in the money. I don't need to trade this thing and then potentially get a margin call for being long on this thing at close. And for those of you guys that do trade futures, you know that the initial margin is much, much more expensive than the intraday margin. An initial margin is the money required to hold the trade overnight. Intraday margin is the money required to day trade. in between the open and the close. So massive move up on Russell 2000. Just kept on beasting. I mean, this thing was an absolute monster this morning. We did not get in on this trade this morning because we were in silver, which is fine. We still ended up making bank on silver, so no skin off our back. But we noticed once we first got into this trade here at about just shy of 11, we were like, okay, this thing is not breaking out here. It's just chopping around. It's going to sell off eventually, right? So when you're live trading this, you only get to see what's left of the chart. You don't get to see what's right of the chart. So we thought like, okay, this is a sell zone. It's not going to close back above. You get this massive red candle here. It closes below this green one. Then you get a lower red one. And at that point, you're like, okay, this thing's got to sell off, right? It's looking pretty bearish. And even if I was to draw a trend line here, so we'll take the trend line and we'll just kind of draw this upwards, you guys can see very clearly that the trend was broken. So it rides the trend of the trend line, and as soon as it doesn't, it either breaks down or it breaks and chops sideways. Generally, when it chops sideways, that is a potential reversal signal. So that's why we tried to short this thing. And then we just kept getting stopped out. So we shorted here at 2057.20. Then we got stopped out, as you guys can see, at 2057 because it bounced again. And then we tried to short again at 2056.1. And then it came down here. Then we eventually got stopped out at 2055.9. And then it just kept on doing the same crap over and over. So I think the last trade, as you guys can see here, our last trade, 2056.1, we were expecting a breakdown. It didn't break down, so that really sucked. We were expecting a big move here, but so we closed out for a small, tiny profit of 2055.5. Again, no close below the EMAs. We were at least expecting it to drop kind of below this candle. Where was it? These candles right here at 2053.9, we never got that, so that was really kind of annoying. So we didn't want to lose money. We just closed it out after so many trades and said, okay, we're over trading. This thing's clearly not going to sell off. It's going to be stubborn, whatever. We'll just get out. And as you guys can see, after the close, it is, or basically around the close, it's starting to finally sell off. Imagine that. So with that being said, we're going to take a look at the trade performance here. So you guys can see we are up 915.46 after, of course, commissions. We have to pay commissions for this. It is not free to trade futures. And you do have to have money in your account sufficient enough to be able to trade futures contracts. And there is a risk of losing money, so understand that. So pretty good day overall. Now, if we go back to the charts here, just so you guys can really understand where we're coming from on this. So there was a very clear resistance zone here, okay? It was obvious as day. This thing had been chopping at that same level for hours, not doing anything. It had a massive overextension above the EMAs. I mean, if we look here at the peak, you guys can see from 2060 to get back down to that blue EMA was almost a 22-point drop. That's a huge move, just so you all know. And we also had the death cross on the MACD, and we were overbought on the RSI, so we didn't see any reason not to short, and it just simply would not sell off. I don't know why. It was really odd. The 15-minute is even more pronounced, as you guys can see here. Just kept kind of pushing against that resistance, but not actually selling off, even though the MACD clearly had a death cross all the way back here. So if we go over to the hourly chart, you guys can see even more so that this thing is overbought on the RSI, and the MACD is massively overextended here. Normally that would be a bullish sign, but it's so much so overextended at this point, and the histogram was starting to fade that we thought it was going to sell off, and it just did not sell off before the close, which kind of sucks. As you guys can see from the peak here at 2060 to get back down to the blue EMA here was a massive, horrendous 30-point drop. That's a huge move. That's roughly about, I think, let's see, it's $50 for every dollar move. So that would have been about a $1,500 move if it played out, which it did not. So that kind of sucks. Obviously good for investors. The Russell 2000 is very bullish. We're not trying to short the Russell 2000 because we want to see it go down. We're just simply trading the trend. That's kind of how we do it. As you guys can see very clearly here, the Russell 2000, at least up into this resistance, was trending. We were kind of expecting it to sell off. It did not. That's another reason why we traded the NASDAQ. The NASDAQ was trending. As you guys can see, it trended up, found resistance, and then sold off. We sold the Russell 2000 after the NASDAQ, so we expected something similar to happen, and it didn't, so that's disappointing. We only took the one trade on oil because, as you guys can see here, it kind of just more or less was going sideways in between this range here, and we said, yeah, you know what, we're not going to trade this because it's just not the right day to trade oil. It's not. It's just chopping around. One of the number one rules we try to stick by when we trade futures is not to trade chop. If it's trading sideways, then it's no good. It's not worth trading. We need to see something that's trending, that's actually moving in a particular direction, like silver was, and the other two that we traded. So anyways, this is our futures trading for the day. We're going to try to do some more videos about this in the future. Obviously, we cover a lot, so hope you all can be patient and wait for that to come out. Anyways, please like, comment, and subscribe. Hope you all enjoyed the content, and we'll see y'all later. Peace.